Hello traders, this is Dez and this is the weekend edition, good through August 18th, 2013. Let's get busy. Well, Wall Street extends losing streak. Wow, Dow posts its worst week of all of 2013 and it happened this time around. And I'm going to share with you a couple things. We're calling for a bearish market here. Be looking for bearish plays. Some of those on our bear list that we come out with each weekend. It's on our V newsletter, bull and bear list. But this is one is down 5.77% for the week. Nice drop with a bear flag. CLI was another one. This one is on our bear list. Big bear pullback. Almost a rising wedge bear type flag with a massive sell-off. Another one, ARE on our bear list. Massive sell-off, ARE. Another one, STR. These are all 5% plus on the drop side. Another one here, we kind of come up, rolling over, finding a little support here, but a nasty little drop this week. I'll give you one more, BGG, or BGG. This one gap up, big sell off, just horrible, horrible, horrible. So these are just some on our bear list. We give you a lot more. We look over I would say, how many? 11 to 12 different metrics on our bear side, 16 on our bull side. On our bull list and bear list, we give you a bull list and a bear list fundamentally, and then we trade them tactically. So it's the best of both worlds. We did have one on the bull side, believe it or not, in this horrible week. Do exceptionally well on our bull list, going up. Oh, it was up more than 5% here. PRAA. Probably be setting up for another play there. There's our freebie. Actually, you would be insane if you just don't go to the website and check out the V newsletter yourself. You get 2 weeks free. So quickly before I get into the market here, all you do is go down here, premium products, go to stock picks V newsletter. It comes out each weekend and you can trade along with us. Put in the code 2 weeks and that special code will give you 2 weeks free of charge. Make a ton of money and get signed up. All right, let's get looking at the markets. The S&P daily, check this out. We're in this nice uptrend, but then we go into this rising wedge and we have a bearish divergence, but we're at a support level. So be watching for a support level. But I say this, if we do break down below 1649, be looking to be a bear in this market. A bear in this market and make some money. On the monthly chart, we're still making higher highs and higher lows, so be careful. But if this is the top, you're going to see a sizable drop commence. So on the daily chart, shoulder, head and shoulders, a head and shoulder and a big drop, and finding a little bit of support, the rising 50-day moving average, but there's still a lot of downside potential here. Be watching that, but we're going higher here, lower here on the MACD divergence. Problematic for the markets. Quickly on the Dow did break down below a major support level. Shoulder, head and shoulder. This is head and shoulder trend reversal pattern, but we are finding a little support here at this area. Resistance now serving as support. If you look here at the weekly chart on the Dow, bam, to the downside, looking really gnarly. Rising wedge breaking down off of a bearish divergence on the MACD. The 20 weekly moving average already pierced. We do have a close below that. The monthly chart at resistance. Wouldn't surprise me to see this thing sell off. A lot of downside potential here on the market. Bearish, bearish, bearish. NASDAQ, check this out. Higher swing high, lower swing high. There's your double top. M for murder. On the daily, we get a big gap down now below the 20-day moving average. The weekly chart, check this out. We were resistance. We failed to hit resistance. So I drew this red line in to show you how we failed to hit that resistance, showing relative weakness, and we're dropping here. So now we have a lower high, lower low. We are in a pivot candlestick heading southbound. On the monthly chart, we're not at any sort of resistance area yet, but if we do start to break down, that shows a lot of relative weakness because it couldn't get back to this 3800 resistance area. You see here, resistance. It should have made it back up there, but we're finding weakness already. Russell small caps, if you're playing the small caps on the monthly chart here, we're almost at a resistance area. Be very careful going into that if you are long. The weekly chart, check this out. We go higher, 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 almost bump our head at resistance. We get almost there, relative weakness, and boom, to the downside. And this thing's looking gnarly. This thing could get hairy and fast. A nice little breakdown. And on the daily chart, shoulder, head, and shoulder, I got it marked very nicely for you here, and a major sell-off. MACD, we're down below the zero line. It's all looking ugly. So if you take a quick look here at the VIX, the volatility index, big gap up the last couple of days in the market, Thursday and Friday, at some area of a resistance. Remember, this is the fear indicator. It only goes up when there's fear. On the weekly chart, we're down here at these lows. Every time we get to these lows, we spike higher. We get to these lows, we spike higher. We get to these lows, you see it. So on the monthly here, we're just in these low, complacent areas. And the markets are low. It's time to go. So this would be something to be watching for. Now all you gold bugs out there, there's some money to be had. We've been talking about this being a play. We're heading higher, but we're coming to a resistance area. I'm waiting for a pullback to look for more entries. On the weekly chart, we broke out of some resistance, but we have the 20-week moving average acting as resistance. On the monthly gold, we could be at a low, heading northbound. I really wish to see more volume down here. I'm not seeing a lot of institutional buying in gold at these lows. Silver, nice falling wedge on the monthly chart. Nice pop here. Low volume as far as I'm concerned. I know the month's only half over, but I'd like to see a little more volume flow into this. I'd like to see a nice breakout to the upside. Now on the weekly chart, boom, on a nice uptick on volume. All is looking well above the 20-week moving average. And on the daily, up, up, and away, watching for a bull pullback or a high base formation to give us another entry into this precious metal. All right, take a look here at Google for all you tech players out there. Google's in serious trouble. We did break down, continue to break down. We're at coming to a major support area, so there could be an opportunity to go long, but let me show you something on the weekly. The weekly, we have this nice rising wedge with a bearish divergence and a breakdown. I wouldn't touch that long with a 10-foot pull. On the monthly here, we have support, 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 support. We broke support already for the month, but the month is not giving us a static candlestick, not yet. So this could rally back, and it needs to, because if we close down there, game over for Google. If I go to a line chart, you'll see support, support. We broke that support. And taking a look at everyone's favorite Apple, which actually on Friday almost went up 1%. But check this out, monthly chart, nice pop. Nice pop on dissipating volume. Here on the weekly chart, big pop. So for the week, we actually had a big volume spike come in. And be watching, this could be capitulation, a nice spike, and then you'll get a sell-off into that momentum on the daily chart. Up, 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 and away. Now over 500 bones for Apple. And Facebook, this is a nice looking play here. We have a nice bull pullback to the rising moving averages, and we have a little pop here. But here's your warning. Usually that first candlestick that does the pop, if it gives you a little mini-me candlestick like that, usually it wants to peter out thereafter. On the weekly chart, you can see we're begging for a bull or a bull pullback here. I'd like to see a bull pullback down here to the $32 range. If we could get a bull pullback to the $32 range on the weekly chart, yummy. Be looking for a nice trade. And on the monthly, we're just going higher. And Microsoft monthly is giving us a nice little bull pullback to the rising monthly moving averages. And on the weekly chart, you have a M for murder. M for murder, big crash, little bear pullback. Microsoft's looking very bearish on the weekly. And on the monthly, on the daily, you can see the rolling over effect, the losing of momentum. We had the rising wedge. That did break down. And then we go into this little mini-me uptrend. We have this little bull pullback. But we close below a major support line on the Doji. That broke the ice. Now we are sub-zero on the MACD. So I see Microsoft also going bearish. So there's a lot of bearish opportunities out there. I think going into next week, be wearing your bear hat, because there'll be some money to be made. But watch for those violent bullish days that will come in. Try not to be shook out of those days when you have them, because they will in fact come. Going back to the S&P daily, so you get another look at this. I wouldn't write out a little pop here before it continues down. However, you could have one big nasty red candlestick in day one, and it could happen within the first few hours of the trading day on Monday. Now, just again, you're out of your mind if you don't take us up on a free offer. All you do is go over here to freeonlinetradingeducation.com and check on the Stock Picks V newsletter, and under special code put in 2 weeks, get 2 weeks free, try it out. And to be quite frank, it's under $30 a month. It's $1 a day. Your commissions are costing you $5 to $7 each way on commissions for each trade. This is $1 a day. Give me a break. We're doing a lot of work here and coming up with the very best. What separates us from everybody else out there, nobody else can say this, is we go through a lot of analysis to filter and to vet our stocks fundamentally. So you don't have to. We do all the heavy lifting for you. And then we trade them technically. It's the best of both worlds. That is what separates us from any other list out there. We believe it's the best list. And for $1 a day, it's insane not to get it. Get the 2 weeks, see it for yourself. And check this out. We're at 4,600 plus. We keep growing. Just yesterday, it seems like we're at 2,500 for far as Facebook is concerned. And listen, go to Facebook, check this out. I did a post that Frank actually brought to our attention. This was 5 years ago. I did a post where I did this rant. I just went ballistic on brokers, and not all of them are bad. Those that are well educated on technical analysis are the best brokers. I highly recommend that you hook up with those type of brokers. But as a whole, brokers are glorified salespeople, not taught things of technical nature. So with that said, what you want to do is go to the Facebook, go to Grok Trade, not like it, but then watch that video on the broker rant. We're getting a lot of reviews and raves on that. I think you'll find that very enjoyable. So with that, losing my voice, I just want to say thank you. You guys and gals are the best. About 15% of you watching this video are female traders. We appreciate that. A lot of lefties out there. If you're a lefty, let me know in the comments below. And a lot of you are engineers or engineer types. Please let me know if you're an engineer and what type of engineer you are. And if you're a business owner, we get a lot of business owners. We get a lot of pilots, airline pilots, both professional and recreational. And we get a lot of southpaws. And then if you're a female, you are usually very independent and probably a business owner or very high up in an organization. So there you have it. Take care. Safe trading. And there's a little share button down there below. Click that and share us with your friends. Even if they don't understand this jargon that you and I understand, they'll think that you are a very smart, intelligent individual. Be the truth or not, who cares? Share it anyway. Later.